The question, in what way is technical analysis different from numerology? If you're interested in intraday or short-term trading, technical analysis is the only way to make money. Fundamental analysis is for investors with sufficient amount of trade time. Comparison to numerology is an indication you haven't understood technical analysis and its methods or went through some useless initiation into the subject. I'll focus my answers on intraday/short-term trading with derivatives like futures. Here are some reasons why you either cannot believe in technical analysis or haven't made money with it consistently. You're a fundamental analyst who cannot believe a bunch of people with very little knowledge on complex topics drawing horizontal/vertical/parallel and squiggly lines on a chart can actually do something. Sorry, I had to do this up front. I hate their condescending tone. You think technical analysis is a science that will work every single time you take a trade. No, it's a tool that lets you get it right 4, 5, 6 or 7 times out of 10. You don't think in terms of probabilities. It's okay to not make money with the next trade or every single trade. You aim to make a profit over a series of trades, preferably over a period of weeks or months. You can see that I said 4 to 7 wins out of 10, a series of trades. You had a 50% chance of winning/losing a trade when you hit the trade button. You think technical analysis alone is enough. Without developing the requisite peak levels of discipline, it's impossible to not give up your profits on wasteful trades. Do not trade when you're under stress or out of your mind. How to bring your trading stress levels down instantly. You do not follow any of the money management principles. Are you betting more than 2% of your capital on a single trade, i.e., does a loss exceed 2% of your overall capital? You cannot bet 10% of your money on a trade and blame technical analysis for it. You do not follow the risk management principles. Without money and risk management, you're never going to make money with any kind of analysis on the market. You haven't developed a proper strategy, i.e., your own unique method of entries and exits. You haven't spent enough time developing your trading psychology. One day you feel fantastic, next day you think this is impossible. That's a sign that your mind is still not ready. You haven't backtested your strategies in a virtual environment. Even after you do and are consistently successful, it takes time to get used to the pressures of real trading. You don't have enough capital. The more capital you have in relation to your dollar/rupee return expectation from the market, the fewer number of trades it takes to get to your return expectation over whatever time period you had in mind. Every time you hit the trade button, you're taking a risk with a 50% chance you might win/lose. I have already talked about risk management. Is the risk you're going to take with the next trade worth the potential returns? Have you learned about market structure and framework? Have you learned about price action? You can use a million indicators, but they're almost all a derivative of price. Learn price action, support and resistances and all their nuances. Have you spent 10,000 hours on the market, analyzing charts and trying to hone your skills? Else, you're looking for a shortcut and that doesn't say much about you. Have you made an effort to learn fundamentals of the instrument you're trading? Have an intimate relationship with the script you plan on trading regularly. If you do all this, then mathematically/theoretically you should not make a loss. Imagine you're risking $1, which is, let's presume, less than 2% of your capital. Every trade and your average win size is $3. Risk management, i.e., when you win $3. When you lose $1. Even if you lose 7 out of 10 trades, you still make a profit of $2. If you cannot get at least 3 wins out of 10 consistently, you should not be trading with real money. Of course, in practice and in theory won't be the same. You hone your skills to get as close to or better than in theory as possible. You will always, of course, go through bad streaks of time or a drawdown. But over the longer run, it should smooth out. Just know that there are many, many people who successfully do this for a living. Hope this helps. All the best. Check the link in the description below if you want more information with your own data.